Indian startup valuations are slashed by global investors. Write-downs are now approaching 50% for former investor favorites such as tutoring firm Byju and food delivery service Swiggy, U.S. securities filings show. Recent filings to the U.S. Securities and Exchange Commission show that Invesco and BlackRock cut their valuations of Byju from $22 billion to $11.5 billion and of Swiggy from $10.7 billion to $5.5 billion. The new estimates highlight the changing fortunes of Indian startups after a boom in 2021 and early 2022 created 60 unicorns valued at more than $1 billion. They also set the stage at loss-making companies for so-called down rounds, in which financings are done at lower valuations than before. The markdowns compound trouble for Indian startups. How did this happen? During the COVID pandemic, a startup boom took place in India. Venture capital investors bought startup stakes at lofty valuations in the hope that a burgeoning middle class would lead to a spurt in consumption. Indian startups also benefited from a comparison with China, where the government's regulatory crackdown on technology companies raised concerns among global investors. Flushed with funds, startups spent lavishly on marketing. For example, Byju paid to put its name on the jerseys of the Indian cricket team and was one of the sponsors of the FIFA World Cup. With funding prospects diminishing, startups are now reducing discounts, threatening their ability to attract more consumers, and shutting down fledgling business lines. Swiggy shuttered its meat and premium grocery delivery service while Ola closed its food and grocery businesses. The growth rate has slowed down because startups are building more sustainable businesses and giving less discounts. It is said that consumers in India have been very heavily influenced by discount-led models. Without VC-funded discounting, it gets tough to grow businesses in India. To deal with this, some large startups are looking to raise funds by issuing convertible notes, giving investors the right to change the securities into equity during their next fundraising round to bet that their valuations will be higher by that time. Questions about the spending power of Indian consumers were raised this year when food delivery startup Zomato closed down operations in 225 Indian cities, citing poor demand. What could this mean for the Indian startup scene? India's top startup stars having their valuations dropped and its aftermath will possibly influence fundraising, public offerings, and staff morale in the ecosystem. These challenges could also be an opportunity for Indian startups to build more sustainable businesses and focus on long-term growth rather than short-term gains. With the right strategies and support, Indian startups can weather the storm and emerge stronger in the future.